Welcome everyone. Today we are going to talk about Refi Now, a new Fannie Mae program for people that actually are struggling qualifying to refinance their homes due to their income ratio. My name is Isaac.duenas and I work for Nations Lending. I'm located just outside of Cleveland, Ohio, in our Independence branch. And today we are going to talk about a new program that Fannie Mae and Fannie Mae, no Freddie. Freddie didn't like this. Fannie Mae announced this program at the beginning of the month, and is really designed to help some families that don't qualify due to their income to refinance their home. So it's designed to give these families a little push so that they can refinance their home, they can get themselves out of high interest rates and can take advantage of the low interest rates that we see these days. However, this is not for everyone. There's tons of regulations, tons of rules. And just like anything that the government designs, it has lots of loopholes. I wouldn't say loopholes, but it is just tough to qualify. I haven't sold one of these refi programs yet myself. It's true they just came out last week or a couple weeks ago by the time you watch this video, but it's just not easy to find a family that meets these specific requirements. So if you type in Google Refi Now rules, it will take you to the Fannie Mae website. And this is exactly what I'm reading right now. All right. So let's see. First of all, so what is it? Refi Now expands eligibility to help more homeowners reduce their monthly mortgage payments. Now, what are the requirements? That's what we're going to read. Refi Now helps homeowners by requiring a reduction in the homeowner's interest rate by a minimum of 50 basis points and a savings of at least $50 in the homeowner's monthly mortgage payment. So you need to save the family that you're refinancing at least $50. If you cannot do at least that, if you cannot reduce their interest at least 50 basis points, which it could be like half of a percentage for you to understand, then you cannot do it. So you have to be saving money to do this. You cannot just do it because you want to take money out of your home. I mean, you could, but you're still going to reduce the monthly payment at least 50 basis points. Does that make sense? Also, it provides a $500 credit from Fannie Mae. This is huge. To the lender at the time the loan is purchased. If an appraisal was obtained for the transaction, the lender must pass the credit to the homeowner. So if you pay for in a way, you get reimbursed I'm assuming up to $500 for the price of your appraisal, which is huge. I mean, pretty much the government is paying for you to get an appraisal done on your home. That way you can refinance. I mean, that's awesome. That's great. Waiving the 50 basis points upfront from adverse market refinance fee that Fannie Mae otherwise charges to lenders on balances at or below $300,000. Pretty much what he's saying is that you're going to get a little bit of a cut, a little bit of a break from the closing cost when it comes down to buying points, which is great. I mean, it's not a whole lot, but still, you're getting the best deal that you can possibly get based on your specific situation, based on your credit, based on your income ratio, and that kind of stuff. To qualify for Refi Now, this is what you must have: a Fannie Mae backed mortgage secured by a one-unit principal residence. So that means no multifamily homes. It has to be a single family home, pretty much. And you need to have a mortgage already backed by Fannie Mae. So just to give you an idea, I mean, most mortgages are either Fannie Mae or Freddie Mac. Those are like the two big government agencies that stand behind most people mortgages. Almost, I'm gonna say like almost 90% of the mortgages in the United States. So your mortgage has to be backed already by Fannie Mae. How do you know that? It shows on your credit. Yeah, it shows on your credit report. Current income at or below 80% of the AMI, so the area medium income. And again, you can go to the Fannie Mae website and check out what's the area medium income. And let's say that is $100,000 a year. So a family has to make the area medium income is $100,000 a year. So you have to be at 80% of 100,000, which is 80,000 or below. You cannot be making more than that amount. Does that make sense? So each person, each area, of course, is going to change and is going to be different. That's just for me to help you understand that. Not missed a mortgage payment in the past 6 months, especially these days, and no more than one missed mortgage payment in the past 12 months. I think that's pretty self-explanatory. A mortgage with a loan-to-value ratio up to 97%, a debt-to-income ratio of 65% or less, and a minimum of 620 FICO score. So, 97% loan-to-value. So, I mean, that's pretty clear, right? Like your home loan cannot exceed 97% of the value of your home. That's why they do an appraisal, because they need to know what's the actual value of your home. Then your debt to income ratio has to be at 65%. That is huge. As of right now, before this program, the highest ratio that you can get is FHA. That's why lots of realtors, lots of mortgage loan officers, if you don't qualify for a conventional loan, they automatically go to FHA, because FHA is 56.9999 something. It's not exactly that, but 56.975. Anyway, something like that. So this refi now is going all the way to 65%, which is the highest I've ever seen for a conforming mortgage, meaning for a mortgage that government agency is going to approve for you, that they would be buying from the market, if that makes sense. And then a minimum of a FICO score of 620. So you gotta have at least some credit. And this is, of course, what they put on their website from Fannie Mae. But who knows? I mean, your local bank or your bank might request 640, 650. I think that Nations Lending, the company I work for, I mean, I don't have my laptop right now with me, but I think we also match 620 like them. Anyway, what are your thoughts? Have you tried to refinance in the past few months because the interest rates are so low and you've been declining, and due to your debt to income ratio, because you have too much debt? There's student loans, car loans. I mean, you know, it's not you. I mean, maybe you struggle financially and you put some money in your credit cards, or you had to buy a car for work, and now that car, those payments are making you go above the 56% debt to income ratio, and now you might be able to qualify for this. If you do, could you please put it in the comment section if you have actually used this program, if this has been beneficial to you or not. I still haven't found a family that I got to use this with, but it would be very interesting to see how it goes. It's a lot of regulations, a lot of rules that you gotta meet. It seems that it has to be a specific niche market of families, but I'm pretty sure they're out there. Thank you so much for watching. I hope this helps, and I hope you guys have a good night. Talk to you soon. Bye.